And hello and welcome to another episode of Startup Caps, your eye on startup capital movements in Africa with myself, Tanya Habimano. Now this week, we take a deeper look into the transport and mobility sector, valued at approximately $4.2 billion with projections to grow to around $7.8 billion by 2030. Africa is on the move and its transportation sector is being fueled by innovation. From ride-hailing apps to e-logistics platform, tech startups are transforming the way people and goods get around. But what are the biggest challenges and opportunities in this exciting space? To provide us with further insights, I'm joined by Okemdi Chukwu, Engagement Lead at Brighter Bridges. So, Okende, let's start off by just getting a general market overview of transport tech in Africa. What does it look like from a capital flow?
Yeah, no, definitely. So transport and mobility tech has really kind of seen a huge amount of increased investment over the past few years, particularly as investors start to move away from the likes of fintech and other particular sectors and start to diversify their portfolio a bit more. But even kind of pre 2020, we saw exponential growth from 2018 to 2019. There was obviously the dip because of COVID, and then there's been that increased investment over the last couple of years as well. There's been a slight dip this year, but we expect to see kind of that trend continue to follow a positive curve. So mobility and transport tech is definitely an area for growth over there and has been an area for growth over the past few years.
What caused the slight dip that we saw this year?
Yeah, so it's just general kind of investor sentiment around risks in investing in Africa, particularly as we've seen kind of currency devaluations in big markets like Nigeria. So there's been general hesitancy around investing in particular sectors. So that's across the board. It's not something that's kind of unique to mobility and transport tech. But even with that, we've seen increased number of investors coming in, or different kinds of investors and funding instruments. So things like debt have become more prevalent, mezzanine debt and other kinds of financing have become more prevalent in different sectors, particularly to combat the down rounds in equity and other forms of financing.
Now, transport and mobility is very closely tied to policy, to regulation, to government, and we are in an election year in over 50% of the world's population. So has this had an impact in terms of the amount of capital that is going into this sector and also just investor sentiment towards this sector?
Yeah, so obviously with mobility or transport, one of the big areas that needs to be addressed in a lot of African markets is the infrastructure and the infrastructure needs and how intensive those are on governments, the kind of policy and financing that's needed from government and parts of the private sector to make sure that the infrastructure itself can cope with particular solutions coming to the fore and other kinds of companies being able to prevail really in a lot of these climates. So you've seen crackdowns and Buddhas or Kadas as being the commercial motorcycle transport of choice for a lot of people in emerging markets, particularly in kind of your Nigerias, Kenyas, etc. But then there are also some other regulatory hurdles that make the investment environment a bit more complex. And then we've also seen kind of shortages in talent as people, I mean, I'm Nigerian, so we call it Japa, and go to other countries potentially for better opportunities. So these are different things that a lot of people have to overcome, a lot of investors would have to overcome, and startups will have to overcome as they continue to grow their businesses.
You mentioned Nigeria, Kenya. I'm quite curious to see what the geographical distribution of capital flows for transport tech looks like. Which countries are drawing in the most?
Yeah, so it's not too dissimilar to kind of the general financing flows that come into Africa. So you've got your big four in Nigeria, Kenya, South Africa, and Egypt, still kind of pulling in the most amount of capital as it pertains to mobility and transport tech. I mean, Move, a Nigerian company, raised $100 million to scale their company with financing. If you look at their cap table, it's really international investors that are getting involved in indigenous African startups, which is great to see. But there hasn't really been, I guess, the diversity or spread of investment that comes in. So it's really your big four that are still enveloping kind of the large amount of financing that's coming into mobility and transport tech.
Okay, so looking to the future, when we look globally at the transport and mobility sector, the talk is all about EVs. But I happen to be sitting in a country that the whole of last year had more than 300 days of energy crisis where we didn't have enough electricity. So I'm quite curious what the future looks like for transport and mobility on the African continent.
Yeah, definitely. I'm Nigerian myself. We experience some electrical shortages a lot of the time, so we have our generators on hand to make sure that we can kind of balance the two. But as the infrastructure continues to improve to be able to cope with the influx of potential EVs to the market, the areas or the sectors that will likely continue to experience growth are things like fleet management, vehicle insurance, real-time tracking, and ride-hailing apps. So those are effectively less infrastructure intensive as EVs. I mean, even in Europe, there's a struggle with getting the right networks or charging networks available to the number of EVs that they have outside of, the likes of Tesla. Others potentially struggle with that. I mean, you see them start to transform the way supermarket parking is and allocating certain amounts of supermarket parking for EV charging. That's just not something that's on the minds of a lot of African governments or even African vehicle consumers, really. They would rather kind of get their petrol, which can be quite difficult at times, and go from A to B rather than kind of sit down maybe for half an hour while their vehicle charges up and then go along their way. And who even knows if the infrastructure can cope with that over the next kind of 3 to 5 years.
Absolutely. Well, Akemdi, thank you so much for joining us today. Really great learning more about the transport tech sector.
No worries at all. Thank you for having me on. Thank you, Tanya.
Thank you. And now that we've heard more about some of the stats and figures on this sector, let's shift gears and connect with the driving forces behind the financial fuel, our astute investors. I'm joined by Ionuluwa Aboyeji, founding partner at Future Africa, and Brian Waswani Odiambo, partner at Novastar Ventures. So, Brian, I want to start off with you. What are some of the key factors that have influenced your decision to invest in this sector?
Thanks. So a couple of things have influenced the decision for us. The first one being just the massive opportunity that exists in the informal transport market, right? And the fact that there's a big opportunity to formalize that sector, to organize it. A lot of people today don't own the assets they operate. They don't make as much money as they could. Some of them are the main sources of income for their families. And so there's an opportunity to just organize that sector in a way that makes it a lot more productive and also formalizes it and brings it into kind of the tax bracket as it were, in a way that that value can be captured. The second thing is the opportunity to just do transportation better. And here I mean electrifying it. So we're invested in companies that are trying to electrify the informal and formal transport market. And so just the fact that, Africa could be or could join the charge in having a much better and a greener economy. So a greener society, I suppose, in this case, and transportation provides that opportunity. So those two things in particular have made it quite an interesting space for us.
And how about you, E? What are some of the current trends and market opportunities that you see that have influenced your decision to get in on this?
I think for us, when we think about how we invest, we're usually thinking about it from the perspective of the customer and where we can actually effect the right kind of cost savings and the right kind of business profits in the customer's direct pockets. And when you look at the landscape, you realize that the two or three things that people are spending on every day, food is obviously top of the list, but the next thing is transport for the vast majority of people on the continent. And so we continue to innovate around and find companies that are innovating around making the transportation of goods and people a bit more efficient. When you think about costs of wear and tear, when you think about the cost of maintaining what is primarily a market of second-hand vehicles, when you think about the cost of maintaining, large oil subsidized petroleum products and so on and so forth, and the impact that that typically has on government budgets and the environment. Then you see kind of where we look for the opportunity. So we've looked at companies that there's a company called Swap that we're looking at, for example, that is essentially helping small tuk-tuks to be able to transition to electric cars using batteries, electric motors using battery swaps. There's another company that we've recently taken through our accelerator that's helping Uber drivers and Bolt drivers to be able to stay on the road by providing them with car maintenance services. They're called Flickwheel. We're very famous for our investment in Move, which is the engine behind the Uber platform. We're the first investors there, where we help to finance this incredible company that helps drivers to be able to afford to, over time, buy their own vehicles, and is now scaled all over the world. So we like to look at these problems from the perspective of the end consumer and how we can save them some money.
Yeah, we always like that. But you mentioned quite a few different ventures that touch upon different angles of transport, logistics, and mobility. But when we look at all of these, and I'm coming to you, Brian, we can't help but look at the infrastructure side of it. The fact that there is considerable investment that has to be made from an infrastructure perspective, and as E has mentioned, infrastructure, let's say hard, I want to call it hard, not hard, perhaps hard costs, your vehicles, they have wear and tear. So how do you look at this from an investment perspective? And my question is to you, Brian.
So there's a couple of things, and if I was to kind of dissect the industry in itself, that if you think about electric mobility as kind of a bucket, which is not just about the vehicles, it's also about the charging infrastructure, right? And then the maintenance of that, right? And then you have just your classic ICE like internal combustion engine kind of vehicles, kind of your traditional vehicles, which you need to find a way to finance those assets. And what we do is venture, and traditionally venture has tried to avoid asset heavy kind of businesses. But the thing to say about just first of all that point is, in Africa it's really hard to avoid assets, right? Just by virtue of the fact that a lot of our companies have to build a lot of the value chain before they begin to derive value from it, right? In a way that's kind of scalable, or even before they demonstrate it for someone to someone who could potentially take on aspects of that infrastructure cost and take it perhaps off balance sheet, right? We just have to really back these businesses, and they have to take the risk themselves and demonstrate that it works. So from a kind of traditional internal combustion engine type businesses, what we found is, once we're able to use equity, and Novastar is a multi-round investor, we're able to come in from relatively early, perhaps just after kind of E has kind of seeded and found kind of the superstars. Then we would come in a little bit after that, and hopefully can help and grow with those businesses over multiple rounds. And during that period, we were able to fund some of those assets. We're able to use equity, as expensive as it is, to unlock some of those assets, to demonstrate or kind of have a proof of concept that can scale. And then we begin to attract debt providers, right? And begin to spin kind of off balance sheet vehicles that are funded purely by debt, that is perhaps better suited for those types of assets, if you like, that have longer payment periods, that have kind of wear and tear, that have a huge FX risk associated with them, and all of that is priced into the debt. But then it's taken off balance sheet, and the company becomes an operator of that special purpose vehicle kind of on the side, if you like, and that kind of scales over time. And so you have effectively an asset company and an operating company. The venture goes into the operating company, debt goes into the asset company, and they grow hand in hand in that way, right? And so it's a little bit of kind of financial structuring, but that's a little bit later on in a company's life cycle. Earlier on, you kind of, if you can't find venture debt to fund some of that infrastructure, you just kind of have to use equity to do it. On the electric side, I would just say quickly that battery swapping, financing of the vehicles themselves, kind of in the traditional max move model, those are all businesses, right? There's a pure business that can be battery swapping. There's a pure business that can be asset financing. There's a pure business that can be charging of vehicles, right, as well. And so again, we're super early in the electric space in Africa, especially. So a lot of companies are having to do everything. But what we're seeing over time, or slowly now, is companies begin to specialize and again attract the type of capital that's fit for purpose for what they're doing. And as venture investors, we then look at these companies and say which is the one that matches kind of our return profile. We're still a 10-year fund. We still need to kind of see exit within that time frame. And so we're not necessarily traditional PE or infrastructure investors. And so we kind of have to match assets that fit our timeline. And the lucky thing now is there's a lot of examples that's kind of as E has mentioned as well. So we are lucky to be able to have a lot of pipeline to pick from, and a lot of excellent entrepreneurs to back.
Yeah, indeed. Now, in closing, I've got about a minute left, but I want to get your take on something that Brian mentioned, which is FX risk. You're operating in Nigeria, and a lot of African nations have this problem when it comes to currency and investment. So how do you look at it?
I really don't think of FX risk as something that is extremely difficult to solve for. In our own portfolio, the way we've traditionally handled that risk is that we work with the financial institutions, whether on the security side or on the debt side, to take in the assets and then do currency swaps where we can, or sometimes buy hedges where it makes sense. And we actively monitor those hedges with the right people with the right expertise. So we've never really considered currency risk to be something to shy away from. I think the problem really is a lot of people kind of leave their risks unmanaged, particularly in the venture capital world, because it's not an area that they are particularly familiar with. But, some of us who are local firms and have been around for quite a while kind of understand how currency generally works. And so we're able to work very closely with the local financial institutions to hedge those risks.
Okay, brilliant. Well, thank you to the both of you for joining us today and for sharing your insights. And now that we've found out more about some of the capital flows in this exciting sector, let's speak to our eyes and ears on the ground, the founders of these innovative startups that are the driving force behind the African transportation and logistics sector's growth. In this final segment, we'll be speaking with the visionaries behind some of the most successful startups in this space. We have Adetayo Bamiduro, co-founder and CEO at Max, and Mishe Adi, co-founder and CEO at Jetstream Africa. Okay, so let's start off with rapid introductions. I'd like to get your take from the both of you on how you've uniquely approached transportation and logistics in your respective markets, starting with you, Mishe.
So Jetstream Africa is a digital platform for e-logistics and financing, specifically for importers and exporters. So we specialize in cross-border trade, which involves a minimum of 9 different logistics vendors to move a single shipment.
Sure, that's a lot, and I'd love to dive into more about how exactly you do that. Coming to you now, Adetayo, in terms of how you've approached transportation and logistics.
Max sits at the intersection of electric mobility and vehicle finance on the continent, right? So essentially, we use the subscription model to enable gig drivers, delivery drivers to be able to access the vehicles they need to do their jobs on a day-to-day basis.
Okay, brilliant. Now, let's dive a little bit deeper, Mishe. Your solution very much looks at logistics as well as financing. And like you said, to move one single shipment, it would normally take 9 suppliers. So how have you streamlined that? And I want to ask specifically, looking at some of the recent global shocks, actually. I mean, we had the COVID pandemic. We've also had Ukraine, Russia, that has impacted global logistics quite significantly. Have you found that in your journey you've had to pivot and at some point? And what does the final solution look like at the moment?
So our platform platform digitizes one of the most important aspects of our job. So our job is not just brokerage, finding suppliers or finding logistics vendors to work with. It's coordination. So our ability to coordinate a truck driver with a warehouse operator with a shipping line, that's where the value is, and that's where the technology comes into play. When we were hit with COVID from 2020 to 2021, there were cases when the borders were closed, when flights were stopped, where cargo was stuck at distant airports or distant seaports, and our customers had no idea what was going on. And the one thing that we can control as a digital freight forwarder is the communication to our customers. So our platform is really built around making the financing fast, making the booking process fast, and making sure that communications and the transparency around what is happening in the supply chain is as efficient and open as possible.
Yeah, and I mean, this also makes me think of just some of the challenges and difficulties that can happen when you're looking at transport and logistics in simply being able to operate in different markets, different territories. And I'm quite curious actually to hear from you, Aditayo. I know that you didn't necessarily start on a subscription model. How did that come about, and how are you looking at expansion? I believe that you're operating in over 16 cities. Are you looking at more? What does that look like for you?
The objective for every startup is to expand and grow as much as possible, right? Of course, while trying to deliver profitability at the same time. As you rightly said, we're currently operational in 16 cities. That cuts across 3 countries at the moment. That in itself has taken a tremendous amount of effort, right? But still, the opportunity is there. The market that we are serving is much bigger than our current footprint. Across the continent, I mean, there's easily 200, 300 cities of different levels, right? That are in need of the product that we provide. For us, in the next milestone is to get to 30 cities, right, across about 5 countries, hopefully over the next 12 to 24 months. But yeah, I mean, there's almost virtually no limits to the market opportunity that we have. But we just don't think about it from a market opportunity standpoint. We think about it from a market need standpoint, right? There are people who desperately need the product that we provide. And obviously, we want to stop at nothing until we're able to serve every single one of them on the continent.
Okay, and I guess that is very much the motto of most startups, at least we hope. But coming back to you, Miche, 2019, the AfCFTA was ratified. How has this impacted actually just your sector and your operations?
So the rollout of ACTA has been relatively slow, but I think the awareness that the legislation has started to change people's mindset. So we have seen a new crop of e-commerce platforms that we are partnered with that are focused on intra-Africa trade. And so Jetstream is sort of the back end for these e-commerce platforms. We're moving the cargo, we're financing the cargo, but the marketplaces are being built by new entrepreneurs that are seeing an opportunity to connect Ghanaians and Kenyans and South Africans on a single platform. So it's very early stages for the legislation and very early stages for implementation, but I think we're going to see increase in e-commerce marketplaces taking advantage of the big opportunity.
Yeah, and the other side to that is also the infrastructure to support it. Aditayo, I'm quite curious how you encountered infrastructure. I mean, you're literally operating on a subscription model. These are hundreds and thousands of users. What does that look like from an infrastructure perspective, but also regulation?
I'll start with infrastructure, right? And infrastructure cuts across, payments infrastructure, cuts across things like maintenance infrastructure as well, since we deal with vehicles. And as you definitely know, for many cities on the continent, the scale of infrastructure development is still pretty nascent. Well, what that has meant for us through our journey is, at every inflection point, we've had to build our own infrastructure from the bottom, right? So we joke in the startup world in Africa that you set out to build one company, but eventually you realize you have to build 10 companies in one, right? Because you virtually have to solve every single problem that you meet, because the infrastructure in most cases just isn't there. And even when it's there, you have to still build some sort of workarounds to enhance it and make it function the way you need it to. So we've essentially had to build out all the critical enablers for the solution that we deliver, from the payment systems to the KYC systems and so on that are required, even the fleet recovery systems, the IoT systems, the tracking platforms needed to deliver the solution that we provide to our customers. So yeah, from an infrastructure standpoint, we've definitely had to build a lot of that internally. But I mean, it's fun doing that because you really feel like you're helping to build your country, trying to help build your continent as well. It's a tremendous amount of work, but also extremely rewarding.
Oh, Misha, go ahead.
I was going to say, Tanya, one of the most important things I think about the AFTA is this idea that there's an order of operations. Certain regulations need to come before others, and the most important regulation, in my view, is the mobility of people. So Jetstream does both import and export financing. Right now, export financing is dominant. We've done about $7 million in financing over the past 2.5 years. And in many cases, when we're working on an export, we're working with an African business that is exporting a commodity, usually an agricultural commodity. And the buyer is oftentimes an Asian or an American or a European business that has come to the continent and sourced the supply and built a familiarity level with the supplier and with the supply chain and uses Jetstream to run the cargo. We're not seeing that so much among Africans doing business with each other. And I think there was a recent story where Dangote was saying that he has to get more visas to travel around the continent than a French citizen or a foreign citizen outside of the continent. And until we get that mobility of people, that freedom of movement around Africa, we're not going to see these big business deals which drive intra-Africa export. So I think there's some fantastic initiatives with payment settlement and other infrastructure developments, but it's really the mobility of people that gets to the heart of how business, export-import business is done at the start.
Indeed. Well, I'd like to say a big thank you to the both of you for joining us today and for sharing your insights and for sharing more about your respective solutions. It was an absolute pleasure speaking to you. That was Adetayo Bamiduro, co-founder and CEO at Max, and Mishe Adi, co-founder and CEO at Jetstream Africa. And this is how we wrap up Startup Caps for this week, but the conversation does not end here. Make sure to connect with us on social media. You'll find us on X, LinkedIn, TikTok, and Instagram using the handle _Startup Caps. And of course, you can find out more about all of the guests featured in this episode by visiting our website on www.startupcaps.io. That's it from me. I'll see you again next week.